Hey guys, welcome to Momentum Fold. So we are going at the fourth thing. Okay, let me share the screen and, and we are going on the fourth episode and it is getting I'll record it. So our performance as of now is pretty much solid. Okay. So as per tracking sheet, we were up down as per I was clearly up on silver. So I got into silver at this area at for 4th of April. I mean April 1st we were on the silver as a bullish on silver. As we see clear at the time we found this is I said in if you can go through my previous episodes you can clearly see why we were up on the silver. Okay. So we are up on the silver based on this, and we see a sharp fall on the next month itself. On okay, April we saw a soft fall. April only we got an entry, but April we got a sharp fall. After a fall, we were on sticking to it, and now we are up almost. Let me show 16 percentage. So let me refresh also. So let it be the because people will say something. Okay, this is the testing portfolio. So we just started with 25K. So we are up almost 16.4 percentage. Okay, it started with 25K. Actually, if you watch the previous episodes, we exited at the some days. If it was holded, okay, it will be much more. Okay, so it went to 23, 23, 970. Then now it is 27, 901 current value. Okay, the total portfolio value. Okay, so we are up around 16.4 percentage. So the next, okay, let me go to the strategy again. Let me teach it once again. Okay, if you are new, you don't need to go to last video also. First, let me go to last. So our strategy remains little very simple. Okay, we will be long on asset when it is closing above 10-month moving average, and we will be shorting, we will be exiting the instrument if it is closing below 10-month moving average. So everything is on closing basis. Okay, entry is on closing and everything is based on closing. Here after closing, next month we will be exiting. At the next month we will be at this day we will be exiting. Okay, at this day we will be entering. Again, we exited at this level. We are traveling. I was traveling in the US market at these levels, exited, and again made an entry in the Nasdaq 100. Okay, so this is what we are doing, and currently Hang Seng Index also. We are long in the Hang Seng Index as well. So I was long around this area from this area. So it is cooking well. Let me see whether, but if you want to invest in Hong Kong Hang Seng Index, you have to go for an US broker. You have to because there is no direct tech index available in India. Only Hang Seng Bees is available. I have invested in tech index, but yeah, it's from the US market. So it is cooking well. Why I am saying is see 4 months it is fourth month, first, second, third. Yeah, it's a third month. Third month it's consecutive and inside bar. So you can see the burst activity will be more when I compare to uh, Abbas was like this only. Second, third, fourth, fifth month will be you can see the burst time of activity, how much it has bursted like anything. So even though this is not a single day, you can see it was inside this big candle 1, 2, 3, 6, 7, 8 until 8 months it was still roging around here. Now it has came up. Now it will roll to again 2,800 levels. So the strategy remains simple. You will be will be strong. Will be up on we will be up on instruments which are closing above 10-month moving average, and we will be exiting when the instrument closes below 10-month moving average. Rebalance will be done only once a month at the starting of the month. Okay, because we will be getting the close data at the end of the month, like 31st we will be getting the close data at this candle. So at the first of the month, we will be first working day of the month, we will be thinking whether we should in the index or not. If the criteria is not met, we will be exiting it. So this is the simple strategy which we will be following. This is just an update whether we are getting. Currently, we are in very good position. Okay, so no worries at all. We'll be much more heights to go for a silver, because silver is in huge demand, and I can say you can see fall also, no issues in that. You can see you need two, three, 1 or 2 months red candles also. That is nothing wrong in that. But yeah, unless until it is below 10-month moving average, we will be holding this. So this is the simple strategy which is used to avoid major drawdowns. Okay, I'll show if you why this strategy works in most of the cases. Let me go for Nifty 50. Okay, try only this strategy in indices and buy in ETF. So don't try it in some other spaces. Okay. So if you go and back test it, most of the cases, there were some fake entries as well. Nothing wrong in that. But yeah, see, this is after this area, you will be entering on these. There is no close here. You will be entering around these levels. So I'll show how much after entering at the open price, you will be traveled around 29 percentage. You will be exiting the trade at 29 percentage. Okay, let me put it as a this one. 561 days, 28 or 29 percentage something. Okay, let me open it. 29 percentage. And it is a capital, this is a long-term capital gain tax, so you will be exempted of. Okay. So again, you will be getting an entry around here. The next day, I mean next month itself, you will be exiting with a 9 percentage loss. So you will be sitting in the sidelines, or you will be looking at the gold or silver to for an entry at these levels. So you have avoided, literally avoided another 14 percentage drawdown here. So which lasted for almost 153 days. So it is around three, it is 5 months. Okay. So after that, you will be getting an entry around these areas, which closing is on the same above the 10-month moving averages only. So you can take this, okay, or you can take this. So same will be working out. I will take this and you will be entering on this one. So at least 4 percentage margin. Okay. So the next one will be entry again will be this. You will be exiting on this on 18 percentage profits. Okay. So you will be entering again based on this time, and you will be exiting. But this went into loss, 6 percentage loss. Again, you will be entering and exiting here. See, there are fake entries as well. And I'm not saying this is a perfect strategy, but look at the drawdowns. 14 percentage drawdown, 6 percentage drawdown, 2 percentage drawdown. Okay. Again, you will be entering here. You will be exiting on this 4 percentage drawdown. On the next day itself, you will be entering. Okay. Well, let me put it as a so 4.9 percentage drawdown. Again, you will be entering around this one, and you will be exiting at 5.6 percentage. 6 percentage drawdown. This is a top phase where you will be entering and exiting maximum of okay. continuous losses. Okay, 6, 12, 6, 2 percentage, almost 8, 12, 17 percentage almost lost. Okay, after this you have fallen 34 percentage, but you have avoided this. At this area, if you are okay to invest, you can invest, but as per strategy, you will be getting an entry around here. So your entry will be around here, and you will be making an, you will be, this is also close, yeah, until this one you will be here. So at least 54 percentage you made after the this fall, after this fall. Okay, then again you can make an entry. See, if you believe the strategy, you can test it out. I believe the strategy, it will perform well, but in sometimes you have to face some frustrations as well. Let me see here. You get just get a half a percentage. Okay, so I just delete it now. Just a half percentage. Again, next month you have to make an entry. Then so until this day, 30 percentage. It's more than 365 days. You will be into long-term capital gains. Okay. So see, again you got an entry here after closing. You witnessed a fall which is very less. Okay. So this is the strategy which is used by me. But yeah, during this time I'll be sitting in some other assets. Okay. During if I was out on the market. Okay, let's say whether which is the time. Let's say the COVID time itself. Which is the time which we'll be out in the market. I'll say this vertical. Okay, this is the from no, this month we'll be from to this month is the time. Let's see. So second, I mean this is like a March to July 2020. March to July. XA March to July 2020. March, I will not be entering the March is, no, it's not XAU USD, sorry. March 2020, right? So this is some other calculation going on. Okay. So I want to focus on this March. Where this March at the March level, we'll be entering on this one. Okay. So we might witness some sharp downs as well, because on the March we are out of this. Okay, then we'll be making an entry around here. This will be our entry, and we'll be sitting around Jan. So this is called January. So here you got around 24 percentage from there to there. Here you can switch back to equity when you get, see, this is commodities. You can switch back to equities when you get some other things which is into play. Okay, so at the sidelines you can make this as an opportunity to, okay, so that's where gold come into play. So still whether gold is bullish, yes, the gold is bullish. You can make an entry also, but yeah, it takes somewhat time to settle. Okay, so it is ranging. Okay, it will range, then it will move up. So wait for some time to catch up. And silver is bullish. Silver is not an entry time now. Because the downfalls will be, if it corrects, it will be more. So that's momentum lab this side. So let me finish the end of this session. So, so this is some simple strategy using 10-month moving average. Nothing beyond that. Everything is on monthly. You can take entry based on monthly time frames, and you can see this. You can experiment on stocks as well. But stocks may be much more volatile, and you should be sticking to it. Okay. But see, the strategy works almost many times. But there will be sometimes where you will be getting frustrated because of entry and exits consecutive months. Okay. At the time, only thing you should do is you have to believe the strategy whether you're going good or not. See, if you get an exit at an nifty or equity, you can look at the commodities or you can look at the global markets whether there is an opportunity available there. Where at the time I was looking at the Hong Kong market and I got an entry there. So that's how I have built this port. Build this. This is not also built by me. This is built from the Miben farmer who was practicing this. I just learned from him from some of the webinars. Someone has quoted this to this will reduce the major drawdowns, and this is like momentum value investing. You will be investing in an index which is you consider as a value, and there is also momentum as well. When the index is almost about 10-month moving average, there is some momentum present there. Okay. So that is how whether if you want to check whether this works in major crashes where it has worked in COVID-19, I have clearly shown that. But if you want to, let's say, if you want to 2000, this is the biggest crash, right? 2008, 9. Whether it has worked well, yes. Look at the you got an entry to exit. You got an exit around these levels. No entry because it closing is not. You can see closing whether closing is done or not. No closing is not done. So you got an entry. You got an exit, clear exit around whether from where you will be riding this. You got an entry around here. So this is not a exact close. No close below this. So no issues. So let me measure it for you. So this will be right from here. You will got an entry. This is the system until you got this one. 168 percentage. Okay. Around 42 months. So 4 years. Okay, almost 168 divided by 4. Okay. So that is the value you got on holding this, and you have been out of major crisis. This is almost a 42 percentage on CAGR you have if you are in this, and you have known the major decline has been avoided. This is the major decline, right? From this to this. Okay. Let's not calculate from there. This is where you exited, right? Another 52 percentage you just after that you again got an entry and you made an exit here. So this is one of the easiest and finest way to make money in the market. But peoples will complicate, right? Because it is very easy. That's the pressure. That's the problem. You make an entry here, you sit for monthly once, you have to rebalance. Nothing, not a big technical analyst. Nothing like I can say fancy stuff is there. You just buy when it is about 10-month moving average. You just sit on the sidelines or in the gold, whether it is whether you are out of the equity. That's all. That's nothing big is there here. But to be honest, it beats the daylights out of buy and hold. Okay. If you are buying and hold, that's completely different, and you'll be out to digest a lot of volatility. Okay. So that's the I'm saying. If you have invested this during this time, if you are sitting in the sidelines, you can go for near zero the liquid case is there, right? Let's say whether gold is also below 10-month moving average. You can find liquid case. Yeah. This is the ETF which is available in the all the major platforms. Okay, so you can invest. So every month it is growing, right? Just look at the graph. So you can invest in for a month to month. You can see opening of the month, closing of the month, around 1%, right? You are sitting in the silence or on the earning also, so no issues in that. Closing 1% to 0.5%. You will be earning, so no issues in that. Okay. So don't think that the strategy is wrong or something. Stick to one strategy, will make a lot of money. Okay, that's all from my side, guys. Bye.